Hello everyone, a very good morning, good afternoon and good evening to all of you. How are you doing guys? As we start today's session of Harami pattern, in which we will be looking at this pattern recognition which can be utilized for figuring out the opportunities for trend reversal. We can use this in the bearish as well as bullish market to see if the trend is reversing or if the same conditions are likely to persist for a foreseeable future. So this is your host Vaibhav, and let's now head to the JForex for the newly released trading platform from the Dukascopy Bank SA to see how we can utilize this particular formation to take advantage of the market developments. Now, if we consider this chart, which is defined for the hourly candle grid, you would like to know where this pattern can be found on these indicator options. So there are two ways to go about it. You can simply do a quick search if you type in Harami. Harami is the Japanese word which stands for pregnant, and as this formation looks like the belly of a pregnant woman, it is called Harami pattern. And just to make you aware where this formation is listed, you can find it in pattern recognition. All these pattern recognitions are here. We are looking at these interesting formations one by one. So many of these patterns have been covered, and in subsequent session we will be looking at these other patterns. Also in last session I had explained to you the hanging man. Now it's the turn of the Harami pattern. Here it is. All right. Now it is back to the chart, and this particular candle is just starting, so we will have to omit it. Now if we go back in time, here this is one Rami pattern formation, this is also one, and here we have it. So there are multiple instances on the chart. So once we get the idea of what the pattern is and how we can utilize it, we can think about trading whenever we see this kind of opportunities emerging on the chart. Now let's see what it stands for. So I will have to take two different kinds of examples. This can be utilized as the example of a bullish reversal, and this can be utilized as the formation of a bearish reversal. This one looks better, but this can also be looked into. So the basic concept is fairly simple. It is a trend reversal pattern, as I said in my introductory remark. Now, for that, we need the bearish trend on the chart. Now, here in this case, the trend was not exactly bearish, it was more of a consolidation with last couple of hours seeing significant price drop. And this is two candle formation on back of this decline. We need the prior candle, the first candle, to have a large body of the difference between the opening price and the closing price, where the closing price should have been significantly below the opening price. And what is significantly below, it is going to vary from time to time. So for that, you will always have to consider the average range over last couple of candles. You can always use the range defining indicators like ATR or other range finding patterns also, so you get a good idea of what the range is, what the average range is, and depending on that you will be able to make your own judgment of how significant this difference should be. Now coming to this first aspect, we have this large body where the closing value is significantly lower than the opening price, and there is this shadow on the higher side also, but that is not required. Only we need is this large enough body with decline in backdrop of the downtrend for this bullish Harami pattern to take shape in the next candle. Now the original concept is we need the jump, so we will need some gap up, but forex markets are 24 hours market. These are not the equity markets where we see gap ups and gap downs after the session closes and then restarts again the next day. So because of that, we get gap ups and gap downs in the equity segment, the cash market, but that we don't really see happening much in the forex. maybe gaps might occur on Monday after Friday's close, but that's going to be less frequent. Now, in classical concept, that is the requirement that there should be some gap up opening in the very next candle with these close coming below the prior candle's opening price. So that will mean that whatever selling pressure was seen in the last few candle and particularly the last candle with significant downturn is now coming to an end, and here we have the phenomena where we are seeing some buying emerging. That buying is not significant yet, that it is not pushing much higher, but it is pregnant with the opportunity, and we can then look for the close of this candle, and if it is contained within this prior candle's body, we have the confirmation in place, and whenever we see that in the next candle or next few candles, we can watch out for optimum opportunities, and then go for the initiation of the trade as close as possible to this low of the candle formation Harami pattern. You can use the low of this candle, second candle, or low of this first candle. So that should be utilized as the optimum entry point while keeping some buffer on the lower side. So this is a bullish Harami pattern. Now coming to the bearish Harami pattern. Here we need the established uptrend, and then in the prior candle there is a two candle formation. So in the prior candle, in the first candle, we need the body of the candle to be large enough with its closing price to be significantly higher than the opening price. And then in the very next candle, some price reversal should be there with decline pushing it lower with the opening price also showing some gap down of sort with the open happening within this first candle's closing price, and then that second candle should not go on to decline too much. Its closing price also needs to be within the body of the first candle. So it should only show the promise of a possible reversal, not a full-fledged reversal. And we should also have the chances of then getting the entry closer to the high of these two candles. So when we have that kind of opportunity, we can look to initiate the trade while keeping the stop loss with some buffer above this prior candle. Now, if we look at these three instances of this Harami pattern formation, I think we would have been in position to use it with a good amount of profitability. In this case also, it did go on to make some profit, and in this case the profit would have been smaller, but we do get the opportunity to exit profit. In this case also we have seen this reversal, not a full-fledged reversal, but some profit nonetheless. In this instance also again we have profitable outcome. This case it would have remained in profit for quite a large amount of time, and then it drops on the lower side. Again here we have this bullish pattern with price moving higher for next couple of hours. So in most of the cases, most of the occasions, we have seen that this formation brings in profit, because the way this formation is structured, we do tend to have the profitability quite good. The probability is quite good, but of course not all the trades, not every trade is going to end up in profit. So you will always have to pick and choose, and which Harami pattern to rely on, which to choose. You always have to decide for yourself depending on the parameters like the volatility in recent candles and how these pattern is conforming to that average range. So using this kind of factor, you can decide for yourself whether to take the trade or whether to simply sit on the sidelines and watch things evolve. Now let us see what we can do in terms of the editing. There is nothing to do in terms of the input, as this formation is defined by using two candles, so we can't really do anything with the input. Maybe we can do something with the output, but only in terms of the color combination, customization. So if you feel happy about this, you can keep it as it is, or you can even go for a custom color combination. So if you want to brighten up the mood and the styling, you can do that. Now here, the transparency can also be reduced if you want to make it less prominent on the chart. So here it is there, but it is not looking too prominent. You can always have other data points to bear in mind. All right. Now again editing. Coming to the advanced editing option, recalculate on new candle only. This is not going to cast much of an impact. It will be formed anyway. Same applies with the highlight time period zone, only two candles are used. So if you opt for this, these two candles are being highlighted, but it is not that visible because of the black theme applied on my platform. Calculate from custom data, as I said, there is nothing to be customized in terms of the input or calculation, so this option has been disabled. Show indicator on all the grids, so if you want this pattern to be available to you whenever you change the candle period, you can go for it. So whatever is your candle period, 1 minute 10 seconds, this formation will be recognized on the chart whenever you change your chart's candle period. But if you have multiple indicators running on different time frame and you don't really want the chart to look too cluttered, then you can define on which particular candle period you want this formation to be available. So for that, if you opt for, say for example 15 minutes and you opt out of 1 hour, you will see that on the 1 hour chart this pattern recognition has vanished. But if I go to 15 minutes, there it is back in place. You go for any other candle period, it won't be there. So that's how it is, and it makes it easier for you to have multiple indicators applied on the chart on different time frames, and that makes you more proficient with the data. As the chart is not looking cluttered, you can always read into the multiple data points and use it as you wish to use without one indicator casting too much an impact. So you have larger data points to consider while making a trading decision. So that's all from my side for today's session. If you have any query or any idea to share regarding this kind of information, do write to me in the feedback and I will be more than happy to take the discussion forward. So now I am signing off for the day. For today's session, we are done here unless any of you ask any question regarding this pattern. So thank you all for joining in. For further coverage of the market developments, do check out the Dukascopy analytics page. We are also available on the Facebook. You can reach out to us there too. For trying out this newly released trading platform, the link has been included in the bio. So give it a try and let me know how it works out for you. Thank you all. I'll be back tomorrow with a new formation, many interesting things to talk about. So do join back. Have a fabulous day, a profitable day ahead. See you tomorrow.